Hey, good morning. Today I just want to go over a few things. It's not a trading video, but it's more of a informational video. We're just going to go over a few things, just going over some of the trading tools that I'll use, including the websites I get information, charting tools, and go over a little bit of the market, and then possibly how you can set up your first trade if you're looking forward to. Um, so First, we'll just start with CNBC. It's just the overall very nice website to use. They have up top here, you can go to live audio and you can actually listen to the CNBC live. It's just nice to get informed on the markets, what's going on. And the nice thing about the website is right off the top, they give you the uh, main indexes and the things to watch for. Dow Jones Industrial Average, top 30 stocks, S&P 500, large 500. I think it's just over 500 of the top stocks. Nasdaq is typically, I think, the whole composite makes up all the stocks on the Nasdaq. But there is the Qs that I'll reference in a little bit, which track just the top 100 of the Nasdaq holdings, and I think it's 100 basically all tech shares. Now, Russell 2K is small cap, I think mid cap, a little bit of. Um, we have the VIX here, which is the volatility index, and this just measures volatility in the stock market. Right off the bat, we also have the 10-year Treasury yields, which is used a lot. This also has some kind of correlation with mortgage rates and interest rates, so that's why that one is looked up on a lot. And market movers, including the top movers and the bottom movers, and just some general news and headlines that are of the day. So CNBC is a good one for just getting your news out. You can use Bloomberg, you can use Wall Street Journal, any of that. This is the best free one, I think, to start with. And Bloomberg, Wall Street Journal, they can be a little more technical, and it kind of gets hard to read after a certain point if you're just getting started. Then we'll look at Finviz. So Finviz.com is also free. It's nice. It gives you a good idea of what the top gainers are, new highs, overbought, unusual volume, all of these. They also give you a nice visual of the heat maps. Heat map being just it's like a nice visual showing you whether stocks are in the red, in the green, and you can kind of get an overall just real quick. You can tell, okay, well, technology is really red, having a bad day today. Financials are doing okay. Healthcare is doing okay, 50-50, but then you got communications down, consumer cyclicals, and these are just some of the sectors. On top of that, again, you can kind of see a visualization of the Dow, the Nasdaq, and the S&P 500. And this has a lot of nice tools in it, including you got some basic insider trading information here. And then if you go up top, you got the news. These are all just like the latest news coming in, and they kind of come in from different sources too. So Reuters, Market Watch, Wall Street Journal. I think this is CNN or something. No, that's CNN. This must be Fox. Bloomberg. So you can use these, and it gives you a nice gist of what's going on in the news. Screeners is something you can use to pick out specifically certain filters that you're looking for in a particular stock. The maps here, you can kind of see right here, gives you that heat map, but in a larger picture. And it tells you the performance of each one, and by size, actually, it tells you big of it, how big of a weighting it has in the particular sector. So in technology, Apple and Microsoft have the largest holdings in this like technology. This one I look at a lot. It's groups. It tells you how the sectors are performing um, one day, 1 week, 1 month, 3 month, half year, 1 year, and etc. So you can kind of tell energy's up. You can tell technology's a laggard. And you can kind of be like, well, that could just be, what's happening today, depending on whatever the news catalysts are. But if you look at the week, relatively, technology's been down, almost 6%. Technology's down the whole month, and then you can kind of tell that as time progresses, technology could keep moving down. It's already like in the middle of the range here of the sectors, and technology used to be the leader, so you can kind of tell it's already moving down, and you can kind of then plan. Okay, well, I probably don't want to buy into any technology. Um, Energy is doing really well. Financials are doing really well, and you can kind of get an idea of the market rotations and where all the money's going relative to the time, or what's going on in the market. Um, Vestapia is a nice website for just getting some basic information. And here I'm going to elaborate a little bit on the Nasdaq 100, which are the top 100 holdings in the Nasdaq. Um, and it follows those. These are the top 10 holdings that make up approximately like 50% of the entire Nasdaq. And these will be called the Qs because this ETF is the QQQ ticker symbol. I mean, you can tell Apple, Microsoft, Amazon, Tesla, Google, Alphabet is Google, Meta is Facebook, a secondary Google, Nvidia, PayPal, Adobe, right? You can kind of tell that these make up 50%. So if these are performing well, the NASDAQ should be as well. And if they're not, the NASDAQ will be down too. Then let's take a look at our charting. Our charting tools. So this one you can access from anywhere. You don't need to have software downloaded like the Thinkorswim a desktop application that I use for trading. Gives you a lot more detail, but this one's nice and friendly and free. Um, One thing that I had mentioned earlier was the U.S. 10-year yield, which follows the 10-year government bonds, and that's just something that I always have pulled up watching the yields, especially during a time where interest rates are uh, are a big part of what's moving the markets right now. Um, but we'll just move over to the S&P 500. So let's just look at some market overview and how you can kind of use the charts to identify trends. Let's say. So the S&P 500 track the 500, and the SPY is the ETF, exchange traded fund that is traded publicly, that follows the 500 companies. And up here we have the 1, 5, 30, 1 hour, 4 hours, and daily, which reference each of these ticks, each of these candlesticks, sorry, are representative of either a minute, a 5-minute, 30, an hour, 4, or a day. So we can kind of look at this and we can kind of tell that right now the S&P 500, there was this resistance that I had drawn. It had touched, tried to break through, came back down, took a pullback, which is just taking a breather. It's not making these highs, so it's selling off. It's trying again. It broke through after this low here, which actually, if you look at it right, it kind of just touches this point before coming back up. So this is what's known as a support, and this is what's known as a resistance. So resistance levels are just prices that kind of hold the tops, like ceilings, and then supports are like the floors, right? They don't really want to break above, or they don't want to break below. Until they do, they'll usually have to make an impulse move. There has to be a more demand for it to be pushing upwards, that it will break through. But as you can kind of see, after it broke through, this is the 27th of December. It broke through, held up here, right? Couldn't quite make a higher move. Ended up getting rejected. There wasn't enough buyers, and it just got sold back into this range. And now you can kind of see it's moving back down. So if you're looking at the market in this big picture right here, you can kind of tell, well, if you drew some sections and you just sectioned off the market, you can maybe draw like a line right there, right? You can see that it's kind of made moves around this level, back over here. It's bounced here a few times here, um, and then again we're at that level today, and you can kind of see there was a very nice clean bounce off of that. So you can kind of tell this is a nice range of price that seems fair, right? That is valued at. Um, but you can also see that if it breaks below this level, well, you have this as a support level that that could catch its fall, right? So you could think maybe, well, if this catches its fall, maybe you can use this as a, just like in this instance right here, when it hits this support, you can buy down here, buy low, try to sell high, right? And that's just the premise of what you're trying to do when you're trading. And again, trading is not the same as investing. Investing is long term. You're looking at fundamentals like PE ratios, financial reports, and all that. But trading, when you're using charts, is you're just kind of figuring out where's the value. There's lows here where it sells off, and people are thinking, okay, that's a good deal, and then they're buying it back up. And then you can see people who are buying it up here, or sorry, when it gets to this price point, you're seeing people be like, okay, well, it's looking a little overvalued. I could take profits, so they'll take their profits down here, and then I mean up here, and that's why it's kind of hard for it to break this point, because everybody sees up here as like, okay, well, it's looking either overvalued or it's looking like a good point to take profits. I'm happy with the gains I had, and then people will sell it off. Wait till it gets back down here where they see value again, and then they'll be like, oh, this is a good deal, and then they'll buy back up. So you can do the same thing using these support and resistance lines. These are pretty simple. Um, so you could see if it comes back down to the 451 level, you could probably buy some in anticipation that it's going to come back up, right? Because this is a support that it's bounced 1, 2, 3 times. But that is not all that we have to look at. So if I go over to the QQQs, the Qs, again, this tracks the 100 top 100 stocks in the Nasdaq composite. All the and these primarily are all tech stocks. Remember, being we can reference this here. Primarily all tech stocks. So because of rising interest rates, and tech stocks are growth stocks, they're meaning their valuations are based on their ability to grow. And because interest rates affect that, when interest rates are going up, the valuations are going to fall. So what's happening is all the tech is selling off because their valuations are too high for their growth, and when interest rates are hiked, uh, it's going to affect its valuation. So if we look at this, we can kind of tell that. Okay, so sorry, all this shuffling, trying to find a nice clear way of looking at it. This looks okay. So this is the day chart. So already we can kind of tell these are the tops. It broke out a few times, but this huge red candle means it's sold off quite strong, right back into range. And these two made essentially like a double top, came up, came back down to test this resistance, which is now, I'll use ceiling and floor for a while. It broke through the ceiling, and now it landed on the ceiling. Now it's a floor, right? Now it's a support, it's a floor. And it tried to make a new high, it could not. So in that sense, it's failed, and then it fell back through the ceiling, back into the first level, right? If you want to kind of visualize it like that, and came back to this level one, and came back down to the floor, and now we're kind of seeing, is this floor going to hold, or are we going to fall into like the basement, right? So today that's kind of this point right here, and as it looks like it's trying to hold this point right here. You can kind of see with this little line that's on the cursor, it's going to try to hold this point, but also in the same sense, that floor we had drawn is now kind of acting as a little bit of a ceiling. It's going to try to. So if it holds as a ceiling, if it holds as a resistance now, this will be the new ceiling, the resistance. and then it'll have to find its next support, the next the floor. So we can kind of then take a look at the bigger picture out here. We can maybe find something like around these ranges where, like this right here. So I'll draw this for you. So we can kind of see that the last time it made a few touches, bounced here, confirming this upward movement before it took off again. And then when it came back down, it touched here again before realizing this price wasn't going to hold. So it broke down very aggressively where you can't even see. This is what's known as a gap, when it just breaks down so quickly, usually pre-market or aftermarket, and it'll come down breaking what, like $3 or so, that you just don't see the price action because it came down so violently. So it broke down, came back up here, tested it, said nope, made another try again up here. When it broke through, bounced, right, kind of made this bounce like twice almost. And then so you can see this is maybe a reliable point. You can kind of use that as an anchor point. So if it breaks down below this, and now this becomes a resistance, right? Or more realistically, we can kind of draw resistance here as well. You can kind of see that if it does break down below, then we're looking at this range is the next possible range for a bounce. So if it breaks down, hits this support, there will probably be a bounce just to confirm that this is a good level before it makes either another move downwards or consolidates sideways for a bit before making any moves. So that's just the gist of charting. Let's take a quick look at a actual. Let me see what I have watching. Okay. So here's Coinbase. If you don't know what Coinbase is, they're an app that does crypto trading, looking at Bitcoin, Ethereum, Solana, any of those cryptocurrencies. And right away, we can kind of see that there is this support right here, right? So if you see that support right away, you can kind of tell, well, it doesn't want to quite break this this trend line, but it does seem to be moving upwards. That doesn't necessarily mean it's in an upward trend, because you can see every time it's broken upwards very aggressively, it comes right back down. So you can kind of use this as a point, like, okay, well, it's kind of a good deal. Every time it comes down to this kind of trend line, it makes a bounce back up shortly after. It might cross below temporarily, but it will come back up. So so you can kind of use this as a support level, and you could maybe be getting in at a good deal here for possibly, if it were to just bounce up, you can get it from 230 to 260, which is a $30 move. But here's the other downside. You also have to be careful of, Coinbase holds a lot of Bitcoin, and if we go over here and we go to Bitcoin, let's go to Bitcoin USD. Occasionally you want to kind of look at all the other variables that might affect it, because they hold Bitcoin. If there's any negative catalysts or any negative indications that Bitcoin will not be going further up, that could negatively affect Coinbase as well. So what we have here is, if we looked at this recent move here, let's take a look. This here is a bit of a bear flag. It's a consolidation pattern, which is it's a common pattern that's seen for a bearish move. So it makes this upside down flag, right? And before it broke through and it made a new or low. So with that, we kind of know, okay, well, it just recently made a lower move, but we also have this support here from this consolidation period, right, where it came down, hit this level a few times, didn't want to break through, and then they realized, okay, well, if the sellers aren't taking over, the buyers try to take over and pumped it up. But also, you can kind of see that this is probably the next. This is probably the next support, right? It's got a nice bounces here, a few bounces here, and this ultimately does seem stronger. Actually, this is pretty. I would say this is pretty fair because you have this right here, so you can actually just draw this as a range if you wanted to. It's not going to be perfect, but it's going to be a very nice visual representation of what you could be dealing with. So you can kind of see this range right here, right? It could do a bounce like this, head back upwards, or it can come back into this range and consolidate sideways like it has broke up, consolidated before it moved, broke down, consolidated before it reversed back up. So you have those all against you. You can use those to strengthen your thesis, or or kind of make a better thesis for why you shouldn't. So going back to Coinbase, right? So it's at a support level. So again, you know it's at a good value point that people can buy it up, right? So that can be a good positive move upwards. And then you kind of look at Bitcoin, and you're thinking, well, it's bounced off of here. It's used it as a support and resistance. This could be a good point where it can bounce back up. So using those, you can kind of then make your plays. But in my eyes, the way with the economy right now, Bitcoin isn't really seen as an inflation hedge like they were thinking it would be. At least not at this moment. When they were thinking that Bitcoin would replace gold as a store of value, you would think that if inflation is rising then, and you need to store your money somewhere safer, they would put it in Bitcoin then, like as a store of value, right? But it doesn't seem that way because everybody's selling out of it because they're like, well, this is so speculative, meaning this is just what they think. It doesn't actually hold its value yet enough to the point where enough people trust it to hold its value like gold does. So that's when there's so much uncertainty and there's fear and people are scared they're going to lose their money, they're just going to sell out. They're like, you know what, we're not confident it's going to hold its value, and it can drop, right? So then this is where it started peaking, and you can kind of think of it if you look at the big picture. It kind of looks like a big double top, and even if you started the double top from here, you can kind of see it coming back down here. This is an indicator that I use. It is called the RSI, Relative Strength Index, and it measures just the strength of the buyers and selling. And you can see right now it's below the 50, which means it's more of a selling pressure, but it's also getting pretty oversold. So that means there could be a good value in it soon. So that's Bitcoin and Coinbase. If we look at something like Southwest Airlines, so everybody knows that the airlines have had it tough during COVID. This was it before COVID, up at 58. This was it, when it bottomed completely in May. So from like February to May, it made all this move downwards, and you could have gotten a good price at $23 because that was the low. But you can kind of see as there was optimism that okay, maybe the next summer the traveling will open back up, and that's what this run was up here. People were thinking, okay, well, it's so cheap. It's so cheap. They were buying it up, realizing okay, there was you can kind of see there's a resistance. Every time it kind of bounced off this sort of top here, it would come back down. They were like, okay, well, this is overvalued for it at the time. Come back down, good deal down here. Then bought it back up, continuing, and then this was the nice big hype when we actually got some good travel numbers. When all the airlines opened back up after after what was it, last summer, and there was so much optimism that travel was back up, we were open. And then I believe around this period of time was when Delta came into our lives. So we had Delta scares then, and then airlines were shutting down. There was all that going on where airline workers were quitting, canceled flights. There was still optimism because travel, the demand for travel was still high, but then started selling off once they realized, okay, well, the airline, the summers were ending shortly. The demand for travel was gonna slow back down. Um, and then along with, we were fighting Delta, we had people quitting. Airlines couldn't get enough workers. There was a vaccine mandate, so then anybody who didn't want to get the vaccine, say like 50% of the people didn't want to get it, you're losing out on half your workforce. So then the stock tumbled. They're canceling flights, which is just all a liability because you're gonna have to refund everybody their flights. You're gonna have to, um, just, it kind of ruins your image for a bit. So then it fell back down. It was still tumbling, and now summer might be coming up in a few months, and we kind of are seeing an end to the Omicron, right? Um, we're seeing Omicron is not as severe. We're seeing Omicron as just like a kind of like a cold now, where it's not putting us in hospitals as much, and we're seeing some optimism that hey, Omicron could be over in a month. We were peak Omicron down here, and everybody's got it, and then everybody will be over it for a while. And so we have this now optimism. Again, the stock market is forward seeing, so you don't want to buy right as airlines are taking off. You want to buy beforehand so you can catch the ride up. You can ride it on the way up. Again, you wouldn't want to buy up here. You would want to buy it before it's taken off, right? So that's exactly what's kind of going on right now that I'm seeing. I have a swing trade in Southwest Airlines right now, and I'm expecting a good move upwards. I'm even happy just getting to 53 for now, and then watching where it goes from there. But you can kind of see this optimism um, in the macro economy, and you can also see this being it made a lower low, right? And this is kind of obnoxious. It didn't make a newer low. And why would that be? Is because everybody's now buying it up. So we already seen this test down here, right? Which is almost this exact same price point where, almost in the exact price point, $43, where it tested down here before. And now all we're waiting is for a confirmation that it doesn't want to make a lower low, but in this case, it wants to make a higher break up, right? So that's why I was kind of saying that 53 level, because if it completes this, this inverse head and shoulders pattern, it should come up, should make a break back up above $50. And that's when it kind of signals, okay, we are in an uptrend. After this long downtrend, we're finally back in an uptrend. And then like we just kind of look at the catalysts that support our thesis, being that summer's coming up. Omicron fears are going to be gone soon. We know Omicron. Everybody in South Africa that got Omicron, it was like a peak of like a month. Everybody got it, and then everybody, it was kind of the cases were falling after a month already. So that's kind of what we're seeing there, and you can kind of use those as an entry point, and build your thesis off of that, and that's just how you kind of can look at trends and seeing what kind of trades you want to make. Again, you might think about buying into your beloved tech stocks. Sorry, I don't know, like Apple, right? Um, but you can kind of see from this previous that I drew, it's now falling below this trend line, right? Every time it had come up and came down this price, it got bought up. But now it does not want to make a newer high. It hit this high, hit that 3 trillion headline, where first company hit 3 trillion market cap, but then it couldn't quite hold it. it broke down, and then it's come below this trend line here, and you might be like, well, then is this going to be a move down? And then you can kind of think about your theses of why it should go down, because it's tech, because the price to earnings is like 30%, like the PE ratio is like 30, which is the price comparative to the earnings is 30 times, whereas most tech stocks kind of average, if on the high end, like 20, right, or where it typically averages for most companies on the high end is 20, especially for growth. Again, at long term, Apple is a great company, but you will see a large downside then if you're trying to trade it. You'll see a lot of red for maybe the next few weeks to months. As you know, it can probably catch right here on this 200 SMA or 200 EMA. This will probably be the next support for it to catch. And you can kind of already picture. You can already picture some kind of support here because it tested it before, broke it, but came back down, tested it before it broke out again. So now this, which was a resistance here and became a support here once. It's only tested it kind of, just barely this area once. So if it breaks back down and it falls hard enough, it could break below it. And again, the interest rates rising is again another thesis for a reason why it should fall. So again, that's a lot. I just went through. Just again, we looked at CNBC, Finviz, and a trading view as some of the tools you can use just to get started. We went through some of the Dow, the S&P, the Nasdaq, and then we just went through a little bit of how you can pick your trades, how to build your thesis on which direction you think it's headed, and to support whether or not you are for buying or you're for selling against. And there are always some deals somewhere, even if you're not seeing it in what you're finding right now. There's a deal somewhere. You just gotta understand where the money is going and think about it from a bigger perspective. All right, thanks for listening, guys. That was a lot, and I hope you learned something from it. Maybe can take a look at if there's anything that you're interested in. Maybe down below in the comments you can leave me a little note of maybe what you want me to look into. I can do some videos where if you say you're very interested in Lululemon, right? I can give you a breakdown of where I think that's gonna go. I can give you a breakdown of where I think he's the next support. But again, not financial advice in terms of a professional, just what I'm seeing on the charts and reading the technicals. So again, thank you guys for listening, and I'll see you next time when I trade. Thank you.